Now, folks, I don't want you to get the wrong idea here on a Monday morning to get things started. But you wonder if Buffett watches pre-market prep, not live. It's kind of early out there, but maybe he watches it during the day and he's selling the rip. His stock made a new all-time high on Friday. He's stepping down. Not completely, but Warren's moving on. That's something to talk about on pre-market prep. We thought we had a list of tariff-proof stocks. Well, we could take one off that, and it's hurting a couple others. Earnings, not much today, but they get going in the week. We're going to hear from Jerome Powell on Wednesday. Jay Woods at 8:35. It's a Monday in the red, but it's early. Pre-market prep starts right now.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, good morning, traders and investors. Starting out in the red, right near the intraday low from Friday, down just under 50 handles at 55.60. The buck in the red, 40 cents, 99.43. TLT flat, 87.67. USO down again here, down a buck 73, trying to find support, but boom, took it out. GLD bouncing up 760, 305.58. Silver up, but not nearly as much. SLV up 33 cents, 29.45. And Bitcoin futures, they're slipping a little bit this morning. They're down a little over $3,000 at 94,445. Good morning, folks. Should we get the sports out of the way real quickly, Dennis? I know you had a good night.
I don't care. I wanted the Jets to lose because it's an easier path for the Oilers. But wow, what a comeback for the Jets. They were down 3-1 with 2 minutes left, pull the goalie, score one. And then it just seemed inevitable that they were going to lose. It's 3-2. It's 10 seconds to go. The puck's in the corner, comes back up to Ehlers on the point. He fans on the shot. Somehow miraculously, it passed back to him like a second later with 4 seconds left. Goes cross ice, passes, and then they get the deflection in with 1.6 seconds left to send it to overtime. And then in double overtime, the Jets find a way and knock out the St. Louis Blues. So Jets obviously were the best team in the league in the regular season. So I was like, oh, let's get rid of these Jets. I'm an Oilers fan. I'm like, get rid of these Jets because they're going to be trouble. And on, Hellebuck starts to get hot. He's, the best goalie in the league. So I was very excited that the Jets were going to be losing. And then boom, no, not to be. But, wow, what a comeback. That was an awesome hockey game.
All right, let's get to the markets. And even though we've had a lot of good up days, right? Obviously, making a post-liberation high, Liberation Day high, I believe, yesterday. Started out weak last night, getting some continued weakness here, but right where we came from on Friday morning here. Are we ready? Is it just buy the dip again, Dennis?
It's hard. It's worked nonstop for 3.5 weeks here now, so I won't argue with you if you're doing it. There's multiple reasons for the dip here today. One, the Friday rally I felt was a little bit overdone, especially at the end of the day. Even saw them ramping it into the close a little bit again. But I mean, the tariffs, the market has this in their head that, the tariffs are going to be light and they're kind of going away. And, we're starting to think about, like, the market started to think maybe we could get back to all-time highs. That's the collective thoughts out there of market participants. I think, again, we see this morning that tariffs are not going away and tariffs continue to show up in areas that we didn't even consider. So over the weekend here, and this is probably the big headline, is Trump administration is going to try to find a way to tax foreign movies. What does that mean? To tariff foreign movies 100%. What does that mean? Any movie that is produced outside of the USA will have a 100% tariff on it. So naturally, you think right away, the first thought process is AMC CNK. Well, AMC is resilient. Nobody gives a crap at AMC. It's a $2 stock. Cinemark, CNK, down 6.77%. And then
Huh.
you also think about one of the stocks that I had on my tariff proof list, which is being proven incorrect, Netflix. I was like, wow. I'm like, I did not see that one coming. So I don't think anybody did because Netflix trading down 62 points here right now. Obviously, this implications for the overall market because it is a major S&P component. Also, the House of Mouse, which I absolutely hate, and I've talked about this. I talked about shorting the stock into earnings, but now we're getting this huge dip of 3% here this morning. It has earnings on Wednesday, so I was hoping for a run up into the earnings so I could actually short going in. Maybe I'm not going to get that run up here because it's down 3%. So those are three stocks right away. Also, WBD, which bought Discovery, obviously involved in movie making as well, Warner Brothers, so it's down 4% too. So that's kind of, the four stocks. If you have other ones that are getting hit, I'm sure there is some of them out there. But I mean, tariffs, this is like a slap in the face for the markets, at least reality check here that tariffs are not going away anytime soon. And they seem to keep coming from areas that we didn't suspect.
Boy, this is if you talk about a curveball here, I mean, I think there's people out there a heck of a lot that smarter than us that like can look at the math and find out what the well, first of all, we don't that he proposes it, right? That's number one. So there
I don't think we have any like set, tariff here yet. I think this is all the one thing with the tariffs, it's all proposals to a certain extent. Like some of them are in, but all the other ones from the 90-day list have not actually went into effect yet. So I mean, it's still just proposals here, at least for the next 70 days until we get, I think it's July 3rd when they actually go in. So some of them are in. We know the earlier ones, the fentanyl ones are in, and some of the tariffs are in, but a lot of these are still just proposed.
okay, so it just proposed. We don't was there a like rate of tariff? Was there a proposal?
100%. That was the
Okay,
proposed. That was what's being reported over the weekend.
100%. Okay.
Brent, I don't
That
know if Brent's in the background, if he knows where this came from, this article. Did you see? Was this like, who
Let
the
me
source
see.
was for this?
I think it was a Bloomberg report first, but let me go track that down.
Yeah, because Trump could come
I
out
mean,
and say fake news. Like he could say something like that.
Oh,
Oh no, this
he
came from
wants
Trump.
to.
This came from actual Trump. So there was a tweet. So Truth Social, I have it right here. The movie industry, I'll read it to you, from Donald Trump. So this comes from right, he is the source. The movie industry in America is dying a very fast death. Other countries are offering all sorts of incentives to draw our filmmakers and studios away from the United States. Hollywood and many other areas within the USA are being devastated. This is a concerted effort by other nations and therefore a national security threat. Wow. It is in addition to everything else, messaging and propaganda. Therefore, I am authorizing the Department of Commerce and the United States Trade Representative to immediately begin the process of instituting a 100% tariff on any and all movies coming into our country that are produced in foreign lands. We want movies made in America again. So this is straight from the horse's mouth. This is straight from Donald Trump. He is like a national
And
security threat. What? A
he wants
national
everything to
security
come.
threat. That's a little bit
Let's
of an exaggeration, in my opinion. But wow.
let's keep in. I agree with you, Dennis, that this was a little bit unexpected. But I mean, just a reminder that he wants everything being produced to be produced within the borders of the United States.
He does.
So, let's just keep in mind that nothing, if that's the way you wanna view it, nothing is safe here from the tariffs. If we were caught off guard for this one, let's not be caught off guard if there are more coming down the road, because he wants
It's a
everything to be
fantastic,
produced.
fantastic point here, Brent. I mean, I had the tariff proof list. I had stocks like Take Two, Netflix on it because I didn't think there was a way that he was going to be tariffing or shows that we're watching, but apparently I was wrong. So I think Brent is making a fantastic point. Nothing is tariff proof. So take your tariff-proof list and throw it out. We just learned this the hard way. I have no position in Netflix, but I mean, it's down 60 points here now, Joel, in the pre-market. The stock was definitely a hiding place for a lot of people. Stock was made a new all-time high, was up 10 of 11 days in a row, in the last, week and a half, because people are hiding there. And all of a
Yeah.
sudden, it's like the hiding place is getting hammered. So, I mean, what does that mean? Do you immediately buy the dip? I don't know, man, on this one. Like, I think overall S&P schemed to dip, but there was people who were hiding there because they thought it was tariff-proof. And you know what?
I think
Nothing's tariff-proof.
I just think this is the curveball of curveballs right here. You are at 1100. I drew the 50% retracement. It's not going there today. That's not investment advice.
What's the
We're just at
50% retracement?
1100. This is where we're at. This is the pullback. So I would say, if you caught it over the weekend, you decided to short it when it made a new all-time high, a new all-time closing high. You decide to short it because you're just like, okay, shorting a rocket ship. You're getting a little bonus here. I would say I wouldn't get really excited to the downside until it takes out the pre-market low, and I'll give you that. That pre-market low comes in at 1086.50. So we'll see how that holds up. But that's not the major news of the day, Dennis. An end of an era, but not really, right? I mean, Warren is stepping down, but not completely. Brent filled us in on that. So,
Yeah.
what do you think? You think he's selling the rip here after his stock made a new? You think his target was like 50 or 530, and he just said, when this hits 530 or 540, I'm out? Or you think there's other factors working?
I know you're being funny with the technicals, and we know Warren Buffett doesn't use charts at all. Greg Abel is going to be the successor here. A good Edmonton boy. John chat was letting us know that in the STN room. Good Edmonton boy. He has been with the company for more than 20 years, so it's not like they just went outside. Greg has been making stock picks for a long time here as well. So I think everybody kind of knew who the successor eventually would be. So this isn't a shock. It is, like Warren Buffett officially stepping down. So we've talked about this, like if he got sick or something, Warren Buffett's probably going to get really hit hard that day. Well, this is like the official stepping down. So you're getting that Warren Buffett premium coming out just a little bit. I was trying to look through the weekend. It's very hard to find what the premium is on Berkshire Hathaway because half the companies they own are private. So you don't have like market, like on a typical ETF, a closed-end fund. If they hold all public stocks, you can say, oh, it's trading at 17% premium to the holdings. People are saying it's 11%. Another person said it's 41%. Another person, we don't really know for sure because half the stocks are private companies. So there's no value on those companies. You can guess the value on them, but it's not like we can go to the market values and figure it out. We can go to the market values of Apple. We can go to the market values of Coke. We can figure it out. But when there's so much, that is private as well, being held in the Berkshire portfolio, it's impossible to get it perfect. So we can comfortably say it does trade at a premiums to its net asset value. We just don't know how much that premium is. So I think you're guessing probably, 11 is on the low end. I think 41 is on the high end. I think it's probably 20, somewhere in that realm. So a little bit of that comes out today, down 2.85%. Does it continue to come out? I know you were asking me. I've been doing the Berkshire Hathaway long every night. I obviously did not do it going into the report because, I'm not a gambler here and who knows what he's going to say. So I was not long it over the weekend for those who were asking. But I've been typically long it most nights because it's just a stock that seems to be opening up every day. Made a new all-time high. How many stocks are making new all-time highs on Friday? I think I lay off the trade, and now you want a few days of trading action and see how does it digest? Do they come in and just buy the Berkshire Hathaway dip anyways? Is there a hangover from Warren officially not being there? Brent was making a good point. He's not gone from the company completely, just stepping down as CEO. Still going to be on the board, still chairman, so he will still have some input here, but he will be, obviously not, in the day-to-day operations here and not probably doing nearly as many stock picks as he used to, if any. So, I mean, that's, the considerations here. So I think from my trading perspective, which this is probably my best stock of the year, I probably lay off for a few days and see, do buy the dip, traders emerge. Do you start to see life here again? Do they start to think about life after Warren Buffett, Berkshire Hathaway? Those are questions to be answered yet.
Yeah, and I'll just, I don't want to make it too much, market related. I mean, the guy's 94 years old. He's been doing this, forever. I just think, it's just, difficult markets, a lot of uncertainty, right? One thing about, what's going on right now, tariffs, no tariffs, should we lower rates, get rid of Jerome Powell, a lot of uncertainty here. But, you can't argue with his return. I think I saw something just like some outrageous return of over the years. So, but that's it. I'm
Well,
not gonna.
even they were saying, or Jeremy Siegel. Obviously, Jeremy Schwartz comes on our show here all the time. Who works directly with Jeremy Siegel. He was on CNBC, Professor Siegel, this morning, and just making the point. I didn't realize this. He made a fantastic point in saying Warren Buffett has outperformed the market in the last 10 years with value investing. He says value investing has been just awful the last 10 years. So he says it's so impressive that, Buffett has still been outperforming the market despite buying value stocks and staying away from growth. Because if you think about the last 10 years, it's all been growth. You think about the core value names, there's a lot of them have really gone nowhere in the last 10 years. So that's how good Warren Buffett has been. And we know his long-term performance has really been unbelievable.
Okay, so more. We got some tariff news. We got the war news, and then also on the geopolitical front, potential delisting
So,
of Chinese stocks. Now they've had a nice run. Doesn't really seem to be hitting the FXI that much, but it's just we've heard this before. Look at Baba. Baba's made a nice bounce. That's down 90 cents. I mean, have we heard this before, and
yes,
will it
and
come to
I don't
fruition?
want to just interrupt you here because there is no official delisting. There is nothing like that. What we have here is rumors still that there is consideration here from the administration, from the Trump administration, to delist the China ADRs. We heard this a few weeks ago. It's rumors were coming out this weekend here again. I was trying to think who broke that rumor. It was like out on Saturday. I read it. I know Barron's was reporting it, but I don't know if they broke it. But again, we're just, it's not going away. These rumors just appear to be continuing to, and we know anything is possible under this administration. People are asking, what does that mean for these? What does that mean for Baba and Baidu and Jay? Well, it's not good news. I mean, if those things get delisted, yes, you still own them, but they're not going to actively trade over here as much as they did before. So it's terrible news. So I don't know. Like, part of me, like I've said this even on this show, I would like to go and buy more Baba. I would like to go and buy more of these China ADRs. This is a risk. It's a new risk. I think 4 months ago, nobody thought this was, this wasn't even on the table. Well, it's now, the rumors are re-emerging here again. So, I mean, obviously, we're talking Baba. We're talking Baidu. I own both those in the long-term portfolio. We're talking JD. I own that in the long-term portfolio. We're talking Pinduoduo, PDD. We're talking all these China ADRs. Rumors are rumors. We don't know if anything's going to come to it. But just imagine, that it starts escalating this war with China. I think it's a logical step that the administration might explore because we know they will take action, and they want, when they want their way, they will do stuff to try to get their way. So I don't think the risk is high here that they get delisted, but I think it's non-zero. I think there is a risk here. So, when you look at Baba trading 10, 12 times, Baidu trading 9 times, JD trading like 7 times, it's a risk. Am I selling all my ADRs because of it? I'm not buying more. I don't know if I'm selling them either. I'm mostly out of Baba. It's come back a long ways. I've sold a lot of it now. It's been a pretty good comeback here. I don't know. I could swing either way here, but I don't like to hear this rumor coming up again. It makes me nervous as an investor.
So I'm looking at a Seeking Alpha article from over the weekend. They're citing the Financial Times, a late Friday report saying that the chairs of 2 congressional committees have urged the SEC to delist e-commerce giant Alibaba and other Chinese companies that they allege have ties to China's military. So that's kind of the sticking point here, is that attachment to Chinese military, as far as I'm quickly catching up on this item.
I think
If you
it's
want, yeah,
go
if you want to
go
be a
Joel.
contrarian, this news actually came out on April 16th from
Yeah,
Barron's,
yeah.
and yeah, and FXI was 2.5 points lower than it is now, and Baba is like, yeah, Baba's rallied too. Now, market effects, we've had a big rally that,
Yes,
that plays into it as
for
well.
sure.
But if you want to be a contrarian, there you go. Last time this happened really didn't make it. It's having a short-term effect right now. I will say this, Baba, if you've been riding this thing like a wild bronco and
Yeah,
85 to
yeah.
145 and then back under 100 and now back to 125, hitting the I moved this to a 200-day moving average because I think I did. No, this still may be the 50. There's a little pop, so don't know about your long-term holders in Alibaba, but if you felt you missed it in the 120s, 130s, and 140s, well, here it is again at 125.11.
Here's the issue with everything, Joel, is that we've come back and got back all those losses from the day Trump announced, all the crazy tariffs. So all of those losses are back. I mean, it doesn't get easier from here. We've come all the way up. I just think now if you're buying stocks, I mean, we've come back so far from the lows. So people ask me this every single day, all the time, everywhere. What are you buying? What are you buying? I was like, well, I bought Nvidia back in 91. I bought AMD, and I flipped out a lot of that stuff now. I just feel like we've come back so far. I mean, just give perspective here. One on SPY, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days ago, we were 508. We're 562. That's basically we've rallied 10% in 10 days on the S&P. I've never made a lot of money buying stocks after they rally 10% in 10 days. And we're not talking an individual little name. We're talking the whole entire market. So we got to have perspective here. We've come so far. There is no dip to be had. This dip this morning is 0.7% on a 10% rally. Give a perspective. We've come back a long ways. And if you were puking your guts out in early April because you're on margin and you're like, oh man, my Palantir shares, went from 100 to 70. And I'm like, man, I was margined down on this and I don't know what to do. And it comes way back and you're feeling good now. If you're feeling good now, maybe it's time to just lighten up a little bit. Get off margin. Maybe it's time to just, be a little more cautious. So the answer to your question, to everybody's question, what am I buying today? The answer is nothing. We have run a long ways, and we still don't have clarity on where the tariffs are going. It has
There you
been
go.
an
That's the most important thing you just said.
incredible comeback.
We don't know. We don't know. We don't know. What was it? Was it de-escalating? Were we in a de-escalating phase? And now a stock that we thought was tariff proof is getting hit today. And Brent mentioned that before. What's coming next? I mean, where are the not curveballs, screwballs, knuckleballs. I mean, they're bean balls. I mean, they're coming from all over the place. But we'll take a look, as you said. Nice dip in SPY on a relative basis from Friday, but overall from that April low, it's not a dip. Let's talk about leadership in the market, okay? And that move on Apple. I mean, how many days do you see the S&Ps just ripping? It had news, right? It had
Yeah.
the earnings.
Yeah.
They didn't like what they said, but weakness all day, and now I'll follow through to the downside here in Apple after several green days in a row. A little bit of a dip here in Apple. A little bit of follow through from that negative price action on Friday.
Well, relative strength this week here. It did just report earnings, and sometimes you get a little hangover and then buy the dip reemerges. I think we think about the 200 on Apple. It's where it had some resistance. It's big and psychological level there. I think you probably bounce there. So if you're, Apple and you're a trader, I think you look at $200 as a logical bounce area. That would be a day trade for me. Apple is still in the eye of the storm. Yes, they're trying to figure out where they're producing, how they're going to get these phones in under, obviously a lot less tariffs, than what's currently proposed. Tim Cook's a smart guy, probably will figure it out somehow, but it's still in the eye of the storm. It's still in the eye of the storm. But like to Brent's point, was saying this morning, apparently everything is still in the eye of the storm. If they can tariff Netflix, they can tariff anything. So I think we're just at the point where it's got some relative weakness from the overall market. The valuation is not that cheap. And that's another thing. Like, I want to just bring it back to the overall market here because, we can talk about, stocks, and we can talk about, tariffs, and we can talk about all that. The bottom line is that stocks, U.S. stocks, relative to the rest of the world, are still expensive. Relative to the rest of the world, they're still running a lot higher PEs than where stocks are elsewhere. So that's another reason why am I loading? Why do you think Warren Buffett is 35% cash? He's not 35% cash because he's scared of tariffs. He called the tariffs noise on the weekend. He wasn't even scared of that at all. But from a valuation perspective, he's looking at the same thing I am. Apple. He was selling Apple. I've been saying I'm not buying. I sold my Apple too. I had Apple in my long-term portfolio from $25 to $185. I sold it all out at $185. You can laugh at me, chat. I know pre-market prep. There's, a couple dozen people that hate my guts in there. So I can say, yeah, Denny got that one wrong because it went to 240. Well, you know what, though? I'm just looking at it and I'm like, it's still, even at 203, could I reload my Apple? Yeah, but it's trading 31 times current earnings, 28 times forward earnings, and we don't know where the tariffs are coming in there. Probably going to squeeze the margins a bit. So I'm like, do I want to pay 30 times earnings for a company that's probably getting their margins squeezed and has had no growth, for real, no growth forever? Like 5 years of no growth for Apple on the top line. It's all been buybacks that have driven the share price and valuation, multiple expansion. When I bought Apple, it was trading 14 times earnings. Everybody argued. It's a consumer staple. Should be trading 20, 25 times earnings because that's where the consumer staples trade. Okay, well, now we're saying it's a consumer staple. That should be 20, 25 times earnings. Now it's 30. Now it's a growth story. No, it's not. It's not a growth story. Hasn't been a growth story in 5 years. It's a buyback story. So just Warren Buffett had on here. He's selling for the same reasons I sold. It's just not cheap.
Let's just keep it instead of trying the 200 you mentioned there. To me, I mean, it's a psychological level, fills the gap from a few days ago. But maybe we'll just sit back, look at that closing price from Friday, right? See what the big boys decide to do with this. You closed on Friday. You closed off the low, but you closed at 205.35. It's down 232. Is there a chance on a big rally this morning that this could go scratch, get back to the closing price? Of course not. But that's what I would keep an eye on the next couple days is, what are the big boys decided after the big fall, $8 fall after a nice winning streak? What are the big, wow, 1, 2, 3, 4, 5, 6, 7, 8-day winning streak? That's another thing to keep in mind with the S&Ps. I believe the S&Ps are on a 9-day winning streak. So to have a down day or a couple down days in a row is not definitely not out of the question. Let's just talk about the week, right? Yeah, I know it's Cinco de Mayo. Happy Cinco de Mayo to everybody. But we do have some catalysts this week. We do have some earnings reports. Not so much today. But you
a
have
lot today. No,
there's a lot today.
untrue. The biggest
After
one,
the close.
today, tonight, Palantir. I want to talk Palantir because this is like the big report. I was long it through the weekend because I'm like, you know what? They just buy it up anyways. And here it is. It works again, relative to the market. It's holding up very well. At one point in time, it was up $2 this morning.
You're kidding me.
Really?
No.
Yeah, on Robinhood last night, it was trading up, I think, over $3. It was up at 125, 126 a couple of times here. Yeah, just, market goes down, just doesn't go down. This stock has been the strongest stock of them all. And, I just gave a whole valuation rant and said, like Apple, no business being 30 times. I mean, Palantir's current P multiple, let's just go grab it for fun. is 654 times earnings, 238 times forward earnings, 106 times sales. But you know what? What do I always say? What do I always say, Joel?
Fundamentals don't
valuation.
matter until they matter.
Well, I say that, but I also say when the story is hot, valuation matters zero. When the story is hot, write this down. You haven't heard me say this before, but I've said it for years. When the story is hot, valuation matters zero. We're still in a hot story. Could it go ice cold in a hurry? It could. If they come out disappoint earnings tonight, it could. I mean, the technical setup is pretty tough here. Stock 125 back in February, kissed up to right to that level here again overnight and above it, 124.28. So, I mean, we got a double top in place here. Do we take it out today on excitement ahead of the quarter? Probably. But, I mean, we've talked about these stocks trading up near their highs going into earnings that they, have been getting hit. So, I mean, the setup here is probably to short the name, but I am scared to death to short this name because I have seen this name just go, nuts on earnings reports here as well. We can go get the expected move here. I'll grab that for you a second here too. But, I mean, the bar is very high here for Palantir. So I'm not, and this is a stock like, okay, when I put my investing hat on, not my trade, so I trade anything. I was long it over the weekend. What are you doing long trade? What do you mean you're long Palantir? How you be long Palantir? It's got a high valuation. Doesn't matter when you're trading. Trade anything. Palantir is not going my long-term investment portfolio probably ever because it just doesn't make sense. I always take the Warren Buffett approach and trade 100, some trade 100 times sales. Just doesn't make any sense. Doesn't mean I can't trade it and own it in my trading portfolio. Just not going to invest in it. So taking us back to Palantir, the straddle, how we price out what the expected move is around, rounding, around $18. So it's a huge move. They're expecting like a 15% move here. I think that's overshooting. I don't think you're going to get a 15% move, 14% move, but it's big. So, and this stock is the most loved stock in retail that there is right now. I mean, this stock is just loved. And and rightfully so. I mean, the stock has been an unbelievable performer. Have they bought it to valuations that don't make sense? Probably. But again, valuation matters zero when the story is hot. They come out and blow it away, the story will remain hot.
Were your eyes popping out of your head when you saw this with the SPOOs? Were they down like 20, 30 at the time, and this was trading at 126? The SPOO, right?
I sold it.
No, I know. I'm just saying, you just must have been like, you must have thought that was a gift from the trading gods.
Gift, but I mean, but it's just no. Why am I long it over the weekend? Because I'm like, because the retail community loves this stock so much, they're going to bid it up ahead of the report. They're still doing it again. I mean, you could say, oh, it's down 0.23%. What are you talking about, Denny? The Qs, this thing has a beta twice the market, and the Qs are down 1%. It means Palantir should be down about 2%, but it's not because it's reporting. So again, that strategy, being long stocks ahead of reports, relatively works here again. What do you think going in? I mean, 15 points.
What do I think? I mean,
bar high.
I'll tell you one thing. If they keep that straddle at 18, and this goes to 142, holy mackerel! I mean, I'd sell it at 142. Would I buy it at 106? Yeah, if I was short. But I mean, this is one that, out of my acronym that I had, punt, got very wrong. It's had its ups and downs and everything. But going into the report, I mean, an 18-point move. I mean, that's a huge expected move. But for today, just for shorter term trading, if you're looking at ahead of the report, 124.28 was your all-time closing high, and then the last few times you had 2 days where it did get over 125. It held it for 1 day, and then you know what happened on this day here with this red bar? After it made a new all-time high and stopped Dennis out, because I remember you shorted it, Alex, there was news that Alex Karp was, selling, a couple $1 billion worth of stock. And that was the catalyst on that day. So that's what took it off Gits Keister last time. But during the regular session, the all-time high is 125.41. Oh, you know what? In the day before, it closed at 124.62. So I stand corrected. So 124.28 is not the all-time closing high. So if you're nervous ahead of the report, well, here it is, trading at all-time high. Did we get? I know ON. I don't know if it's a nothing burger here,
We
but
can report it. It did report earnings because there's Tyson Foods that reported here this morning. I don't know if everybody cares about Tyson Foods. A little RX company that reported too. I don't know if anybody cares about that one either. And they probably care about on semiconductor. It is obviously a chip that's widely followed here. We'll give the earnings just because it's still we're in the heart of earnings season here. Still, lots of companies reporting, just not that much this morning. 55 cents versus 51. $1.45 versus $1.40 on this 1.45 billion versus 1.4 billion on sales. Guidance kind of in there. They were at on Q2 gap, they're at 45. It's 45 to 55. So I guess it's a slight raise here. Q2 adjusted, they're looking 48 to 58, 52. The guidance was kind of fine. Slight raise, I would say even. So slight raise on the guidance.
I don't know when those 46 prints took place. I don't know, on the 8 o'clock hour probably. So maybe they took place overnight. But just, if you're trading this today and it gets over $45, you had a series of 4 highs, like from 45 to 46 and change. So there's the potential resistance. If you're looking for a gap fill, top of yesterday's range, that's not too far away. That comes in at 42.25. All right. We have our guest for today.
He's just getting ready here. He's had to hear, just couldn't hear us. He's just fixing it right now. So just one more stock, and Brent will give us the thumbs up when he's ready. We got HIMS, which is going to report here tonight as well. Again, being long stocks ahead of reports just works.
Wow.
HIMS is trading up 2% here this morning. Market sells off 1% of the Qs. Who cares? It's reporting tonight. That's the alpha that I try to extract. So HIMS trading up 2% here this morning. It has been running for 2 days ahead of this. 32. Obviously, we dipped, last week, and then 32, 42. 10 points in 3 days. So I'm going to say it's a higher bar again because 6 days ago, stock was 25. It's now 42. Yes, it's not at the $70 all-time high, but we just ran like 20% into the earnings report. So I'm going to say it's a higher bar for HIMS. Maybe Joel's got a level for us, and we're still waiting on Jay.
I'm just 41.71. Just a kind of a wide open area here. If in fact you can get above and stay above 42.19, that was your March 4th high, and then things open up. What I think is impressive about this stock is that you had the good news. I think who was the partnership with Novartis? Was that it? It had that big up day, and then it had a couple days of digestion.
Yeah.
And then it continued higher. So whether market factors help that or not, it's held. It's held on to those gains. So 42.19 is your next daily high. And then you can see to the left of that, a little bit higher up, these highs at the $45 area. All right. How we doing? How we doing with Jay?
He's ready. Let's rock.
All right, we have Jay Woods on the line, Chief Global Strategist at Freedom Capital Markets, also helping out there on the New York Stock Exchange at CMT. I asked Jay to come on, and he said on Cinco de Mayo, of course. Jay, how you doing today?
Hey, I'm doing well. It's great to see you. Hopefully the technical difficulties aren't too bad.
Perfect. You're perfect. Jay, what is going on here? I mean, we had you on last time, and I can't remember exactly when we had you on, but, a month ago, we're looking, at tariffs destroying the world. We're back. The market's coming all the way back. Oh, no. Oh, no. Okay, we had Jay. Now I don't hear Jay. We had Jay. Now I don't hear Jay. And I'm hearing myself twice.
Okay.
Okay, we're going to remove Jay for a second.
How about this?
Wait.
There you go.
Better.
It's magic. It's magic. I'm everywhere. I've got 2 laptops. This one has a horrible picture,
But
we
anyway,
don't see you, but that's okay. We hear you, and that's the main thing.
you
Oh, I
can't
see you now.
me,
I
that's
see you
even
now.
better. Damn it! No, but audio
Now we
only.
can see you. We're back. We're back on.
All right.
Okay, back
Excuse
to the
me. Sorry to
question.
the audience.
We've
All right,
come
so
all the way
anyway,
back here. What do we do now, Jay? What do we do now?
What do we do now? My God, that's the $1 million question. Technically, listen. This was the ideal traders market. I mean, we haven't seen one like this in quite some time. To quote the great Art Cash, and you have to be nimble. And my God, from tweet to tweet, day to day, we have seen some moves, and we're finally seeing things calm down a little bit. Even reaction to some of these tweets has been calming. But where are we now? Right now, I'm still not sold that we're out of the woods. Earnings have been solid.
You did that on purpose, that pun, didn't you?
You know what? I really didn't. It's just embarrassing. But it's just one of those horrible expressions that just happens to be my last name. But look, this is where you mumble as a technician, because we got back to where, I didn't think we would get back so quickly. I wasn't calling for a V-bottom recovery to this. I still think we have a lot of wood to chop. That was done for you on purpose. But no, it's remarkable how quickly we've come back, yet fundamentally nothing has changed. Donald Trump said we had 200 deals coming. He said that the Time magazine, there are only 180 countries, so I can't wait for these other 20 deals. But it's hyperbole. He thinks that we're going to get some, these negotiating tactics, as they have been played out to be, are going to come to fruition, and the market seems to have forgiven that uncertainty for now. And we're back to where we were right before Liberation Day. So it's very interesting to see this rally. And now we wait for another catalyst. Will it be the announcement of some deals? Still haven't had any of those yet. Will it be the Fed on Wednesday? I cannot wait for Jerome Powell to take the microphone. It's going to be one of the more fascinating times where he kind of has control. He could cut based on one data point at a time, the data being okay, given that we wanted 100 bips of cuts this year coming into the year. This could be a good time to cut a quarter. Will he? No, because the integrity of the Fed is what's at stake right now. So he doesn't want to give this image like, well, the president was pressuring me, I'm giving in. But what he can do is set the tone for a June cut. But during the press conference, they're going to talk about tariffs and tariffs being inflationary. We still have no certainty there. So it's going to be very interesting to see how he navigates the storm of questions when it comes to tariffs. And then when I look at the technicals, there are some stocks that interest me, but we've had perfect relief rallies back to areas where we should pause. And that pause is coming into effect pretty much right now. The Mag 7 names have made a lot back. And if we're going to take that leg back to all-time highs, we need them to be involved. We'll see. I'm watching Apple holding this $200 level was pretty critical. It still is above that level. Amazon on a weekly back above a key level. So there's been progress, but I don't think this is a snap your fingers and we're back to new highs anytime soon. I think this is going to take a quarter or two before we really get in there. So you got to look at a few ones, a few stocks that could be moving. I got a few names. You talked about Palantir right before it came on. Very interesting that made it back to its, within $1 of its all-time high before earnings come out later this afternoon. This thing gaps. It's up 5 of the last 6 times. And when it's up an average of 21%. So to me, it's a stock. If you're trading, it's a coin flip. And I wouldn't be in the name. I would watch to see where it goes. And then if it gaps up, I would buy that gap up with stops, 3 to 5% below, just in case it's a head fake. Because when it does gap on these uptrends we've seen, it continues. So Palantir is interesting to watch. And then if it fails, I'm still looking to buy the name. It's just got some areas of support underneath it, that would probably make more sense to dip the toe in the water, because the long-term strategy, the long-term trajectory, barring any shocking news from the company, still to me looks like a great stock to own. So Palantir is one, and then I'll give you the other one is Uber. Uber, if you punch up that chart going back, what is it, like 18 months, we've got I mean, a wide range, 60 to 80. Talk about your, neutral trends and doing work. It broke down below 60 once. It failed. It got back into the channel. Broke above 80, got to 87, failed quickly, got back into the channel. What is price doing as we go into earnings? It's leading. It's back out of that $80 area, 82, 83 last I looked. Is price telling us something? I believe it may. So we'll see what they do on the guidance front. The guidance wasn't the greatest last time, but talk about stocks poised to make moves. This stock, to me, technically, is one I would take a gamble on going into the earnings based on the price action. And if it fails and it breaks below 80, then I take out, I reset, and I start all over again. But Uber, to me, price action's kind of tipping us off that something may be coming that looks very favorable to the stock.
Jay, let's just go back overall Q1 earnings season. We had the Liberation Day sell-off. I think there was a lot of trepidation over Q1 earnings. Was there some pull forward there? People accumulating things ahead of the potential tariffs. Overall, just give us your overall assessment for Q1, and some companies moved the bar for Q2. Some did, some didn't. Gave you those possible scenarios here. You think Q1 is as good as it gets, or just we're gonna buck this trend and just keep grinding higher with better earnings reports?
Yeah, that's a great question. They have changed, and there are three that stick out: Apple, GM, and United Airlines. When they gave guidance, they kind of gave two pictures of guidance, so it was very clever. First, GM pulled guidance for 48 hours, and then Mary Barra gave some guidance that was a little tepid, but it's guidance. If the tariffs are this, then expect that. And so it gives them, or gives their investors a little clarity. Okay, well, if the tariffs happen, it's not going to be good. So they're telling the president, listen, if the tariffs do happen, this is the bottom line. It's going to impact Apple. Tim Cook, they don't usually guide, but he said what the impact would be. They're moving away from China. They're going to Vietnam. They're going to India for production. And if these tariffs are implicated, it could cost us $900 million of revenue, I believe was the number that he threw out there. And that's why the stock gave a little bit back. It was down 2% for the week, 4% after earnings, after a tremendous run up. And then United Airlines, these airlines, I mean, my God, where are people cutting back first? They're cutting back on travel and leisure. So a lot of these stocks, even bookings chart looks great relative to the other, the hotels and the travel stocks. But it didn't give us the, hey, let's go out and make all-time new highs kind of report. But, relative strength is there. And that's the one name I would want to be in if you wanted to be in this space at all. So it's one of these things where, I'm mumbling again. I think the next quarter is going to be rough. I like some of the software stocks, ServiceNow, that got beaten down ridiculously. Broadcom got beaten down a hell of a lot. They made back a nice chunk of that after their earnings. They're capturing key moving averages. So I think you have a new floor set in and a risk reward metric that's favorable. But what you're not going to get at this point in the cycle is those rip your face off rallies that we just experienced. So if you're getting into this market, I think over the next 3 to 6 months, so the next quarter or two, you're going to have to be patient. And those fun, volatile times, they may have some pockets, but I don't think we're going to see anything like that. And let's just put one thing in perspective, because a lot of this, we compare this market to two times. 2022, which was the beginning of the bear market, which saw some nice recoveries, and every recovery failed over the next 6 to 9 months. And then COVID, also very different. But what happened during COVID, we got that V bottom and we recovered back to the 200-day moving average. It took 2 months. We are less than 100 S&P 500 points away from recovering back to the 200-day moving average in a month. This is strong. So to me, I don't think the all clear is there. I would be lightening positions here if I had some profits, which I did in a couple stocks, Broadcom being one of them, and I'll wait for better entry points.
Do you think we get a retest of the lows? That's what everybody's been asking. And I'm like, no.
No, if we get a retest of lows, that is not a good thing. I mean, my God, we overreacted. We saw what the worst case scenario would be reactionary wise from these tariffs, and now what are we doing? We're walking them back. We're negotiating. So it was very interesting. I don't know how closely you followed it after hours on Liberation Day, April 2nd. The market had already sold off a little bit, and then there was a rally after hours on April 2nd. For 15 minutes until he went to the Rose Garden with that chart that befuddled all of us with the tariffs on countries we never heard of. And why did we rally prior to that? There was a rumor leaked to the Wall Street Journal that it was going to be 10% across the board. So 10% across the board, the market at these levels, the levels we're currently at, rallied. And so we have that kind of sneak peek. If you kind of diminish the tariffs and we go stable across the board, the market's okay with that. But what we're not okay with is a trade war, is escalating trade tariffs with China. Warren Buffett talked about it this weekend, how the trade war is not good for anybody, and that this is, not his words, my words, bad tactics. So we'll see how these negotiations continue. What we walk back, what we claim as victories, but as far as a retest goes, that would be severe. What we've seen on this rally is a consistent level of higher lows. And if we pull back again, let's see if we have a nice new uptrend starting from those, ultimate washout lows around 4850, 4800, and see where we go. The Fibonacci level, like 5136, that we held recently on the most recent sell-off. So I think there's been a lot of progress made to say that the bottom is in. So a retest to me would be surprising. And a pullback, sure. Sideways action, definitely. To get back above the 200-day moving average and just off to the races, I think that's the least likely scenario. So if you're watching this, that's the one you want to go with, because I'm probably wrong.
All right, balanced approach to the markets from Jay Woods, Chief Global Strategist at Freedom Capital Markets. Jay, happy Cinco de Mayo, and we'll be dialing you up again next month. Thanks for coming on.
Always a pleasure. Have a good one, guys.
Thanks, Jay.
Okay. All right. We have some breaking news on Skechers.
Skechers to be acquired by 3G Capital for $63 per share in cash. This just happening here about 3 minutes ago. Stock obviously is lifted substantially here from where it was in the pre-market, 49.37 where it went out. So that's it's up 25% here right now. Automatically, you think Crocs is trading up 2% here right now. We're only up 1% here. I'd actually be trying to buy that thing. I'm going to try to buy right now, but Crocs trading up only 1%. Also, I mean, you think about Nike, nobody's buying Nike. So, I mean, people are like, oh, let's go to Nike. Nobody's probably buying Nike. But, it's SKX, good for retail stocks. I mean, other smaller companies, you can think about like On. I don't know if anybody's coming at that valuation to buy On, but it's trading up about $1. It just rallied $1 on this as well. So those are your peer plays. I mean, if you want to go back to SKX, these things typically, when they get to 63, they get the takeover price. They're going to trade at a discount, obviously, because there is, time value of money to consider. Risk deals don't go through, but, probably not as much risk in this case, just more so time value of money. So it's at 62 here right now. If I'm long, I'd probably just ring the register and not sit around for the last buck.
This is probably the best potential investment advice I could give you. If a stock is getting taken over at 63, you probably don't want to pay 65.75.
Come on. Did somebody pay over 63?
Yes.
Come on.
These algos, man. They get that syrup
go,
and they
Dennis.
get all antsies in their pantsy. Yeah.
Unless, Brad, I'll let you give the color. Unless someone's going to pay more.
Decker's good one too. Tech saying
right.
Deck.
What do you got? You got some color on this, Brent?
Just a little bit. So there is an option here. Shareholders are going to be able to receive $63 per share in cash or $57 per share in cash, and they get one LLC unit of the company that is going to be the private company. The thing that I just wanted to pop in with is for consideration of trading halts. This is something that we talk about a lot in the STN room, at least. And notice that the stock wasn't halted ahead of this news item. This is an NYSE stock. So, you know, I've kind of given some color before on the deliberateness of NASDAQ trading halts and the kind of lack of deliberateness with NYSE halts. Here's another example where, you know, I imagine maybe the NYSE or the company should have requested to halt the stock. Wasn't the case, and that's fine. But, you know, just I guess a little reminder that trading halts on the NYSE can be just like a little tough sometimes. I feel like a few investors kind of get in trouble not being halted on the NYSE versus the NASDAQ.
Yeah, like I don't like it when they don't halt them ahead of like news like that because everybody gets
Yeah,
picked off.
I
So
know.
like I think the
Yeah.
correct way to do it, and regulators, we know sometimes regulators listen to the show. This is something that should be addressed. When you have a company going to announce a company like that they're getting taken over, there should be a regulatory, the company should file for a regulatory halt ahead of that. Because what happens here is everybody gets picked off by the algos. We're just completely disadvantaged. You know, the high frequency trader is going to completely pick everyone off. So, I mean, if you were sitting out there 51, 52, 53, 55, you're getting picked off on all of that. So, where if it was halted, then you just get, you know, the 60, you know, 180 or reopen or wherever it reopens. So I don't like that when the company has, you know, getting taken over, that they don't request a regulatory halt in the stock. So
I think that's right at
halted.
that's right at the top of the list, Dennis. If you say, hey, what news item should a stock be halted for? Private company going private or M&A. Number one. So I don't know.
Yeah.
It's just a weird little
academics, regulators,
notice.
any of you that are listening to the show here right now, put that out there. Propose that. I think it should be mandatory that if a company is getting taken over and they're going to release a press release, that there should be a regulatory halt ahead of that. The company has an obligation to call the exchange and say, look, we have material news here. Don't have to say what it is, but we need, you know, and they can do that. You're allowed to do that. But on something like getting taken over, it should almost be mandatory for the company to do that. Like just put it in the housekeeping list of stuff you have to do when you're dotting your I's and crossing your T's. I mean, you know, it's maybe an annoyance to the companies to have to call the exchange, but it's more of an annoyance to the person who is a shareholder in your company or potentially, you know, like just sitting out there and then they get picked off. So I think you're making a good point here, Brent. Should be halted ahead of that. Absolutely.
Okay, we just got a few minutes left here. We
So yeah,
didn't.
sympathy moves again here. Crocs trading up on, trading up. We've got an on again. Nobody's probably coming for them. So I think Crocs is what I think more like. Think of your lower. Deckers is like trading up on it here too, but you know it's a big company and lots going on there as well. Like I said, I don't think anybody's coming for Nike. So that's why I don't think Nike gets a pure lift off this. So Crocs is the one I was thinking about. And when it was down like 90, I was like, man, that'd be nice to buy. I tried to buy it. There's nothing in there though. So it's up at 100. That's the one I think about.
Okay, you want to talk? You want to talk Billy at all? You want to talk Billy Ackman at all, or
yeah, he's on CNBC right now. So he's taken another. Well, he already had a position in HHH.
He did right here.
Like, yeah, I don't know. Like, I didn't look at the details of this. So Pershing Square to invest $900 million to acquire 9 million newly issued shares of HHH, transform HHH into a diversified holding company. So he's doing something and transforming it and doing some different things with it. I don't know all those repercussions because I don't follow the Howard Hughes story very closely, but it's up 6.4%. We already know he's been in the stock. So he's, you know, doing a little bit of financial engineering, getting a stock price higher.
Well, he tried it when it went on February 18th, and it went to 81.22. Closed that day at 80.60, and then it wasn't straight down. Of course, you had market factors working against it too. So I'm not sure. I'm not sure what he's up to with this long term. Trying to be a new Warren Buffett. It did go to 76.75, so it's already leaked $5 off that level. So we can wrap it up there, Dennis. Any final thoughts on the markets today?
I just think buy the dip has been working. Does it not stop working today? It's a hard thing to say because it continues to work continuously here. So I don't know. It's a tough market to just come in and buy stocks or your long-term portfolio because we've rallied so far. And then it's always been a tough market to short in the hole when you're down 40 handles. You get a little bit of rip. Do you short some stocks? Maybe. I just think we're not in a clean setup here today. We are coming through earnings season. We do have Palantir tonight. Probably sets up a little better from the short side on that one, although I probably don't have the guts to short it. AMD's on Tuesday, Datadog, Rivian, Lemonade. Wednesday's Uber, Disney, ARM Holdings, Axon, Unity. Thursday, Shopify, Cloudflare, Coinbase. You got some big names this week. Some widely followed retail names. So we're still in the heart of earnings season. That's going to be a little bit of a driver here too for the overall market. But I think we're just in we've come so far. I still think, on rallies, it's just prudent to raise some cash.
Okay, and if you want to talk about the adage, sell in May and go away, well, it didn't exactly work on Friday, right? But Thursday or Friday. But we'll talk some seasonality with Jeff Hirsch on tomorrow's show. Folks, thanks for joining us on PreMarket